Hello, everyone, and welcome to the first episode of Getting Your Shit Together for 2025. I'm your host, Neil, and today, it's just going to be me. That's right. I'm flying solo this year, but don't worry, I've got plenty to share, and we are kicking off with a bang. We will be diving into the interest rate outlook for 2025, or rather, my predictions for the year, and will also help you set some killer financial goals to make this year more prosperous than the last one. So, grab your favorite beverage, sit back, and let's get into it. Okay, let's start off with the interest rate outlook for 2025. Now, in any year, looking out for the next 12 months and predicting what the interest rate landscape could be is like trying to predict the weather. Economists and professionals like me generally have a poor track record of predicting the longer term interest rate trends, as one is bound to get it wrong at some point. This would be especially true for the year 2025, with the Trump presidency pouring not just a sprinkle, but a bucket load of unpredictability. But let it not deter me. I will give it my best shot. Okay, so let's start with the fixed rates. Fixed rates seems to have hit rock bottom and seems like there is nowhere to go but up. Several factors are at play here, and much of it is coming from our neighbors in the south. First up is the US government bond yields. Now, if they move significantly, our Canadian bond yields are likely to follow suit thanks to their strong correlation till date. Now, Trump tax cuts and higher deficits could also bring bond vigilantes out of the woodwork, creating more volatility, especially on the longer term bond yields. Global economic performance as compared to the US. Now, if US continues to outpace other economies and the rest of the world languishes, then it could lead to some interesting shifts in our financial landscape. With more money pouring into the US, increasing demand for the US dollar, it is bound to depreciate other currencies and also lead to more challenging growth outlook for the rest of the world. How about Canadian inflation? Well, tariff threats and possible Canadian retaliation to those tariffs could drive inflation up. Now, nobody knows for sure as to how this play out because there are a number of factors at play, and it'll also depend on which industries or sectors are targeted. This is probably the most unpredictable and decisive factor at play, at least for the Canadians. Our own growth outlook? Well, it was already looking shaky, and it is not getting better under the shadow of tariffs. So keep an eye out for that. Poor growth could force central banks to drop its policy rates to stimulate demand, but that doesn't directly impact the bond yields. So fixed rates could still remain strong and possibly increase. Now you would say, okay, how about variable rates? Well, they are for sure a wild card, directly governed by the Bank of Canada's actions. We are expecting a couple of rate cuts, maybe two in the year 2025, but this will be influenced by Canadian dollar strength, all the factors that I mentioned above, and most importantly, the Canadian growth outlook. Okay, let's talk about the Canadian real estate market. Overall, I'm not very optimistic about a real growth year or a real estate market resurgence this year. This is probably going to be more of, okay, let's build from here. And so it's going to take time. If you are expecting markets to shoot up and give you 10%, 20% returns, well, this is not going to be the year for that. But let it not discourage you if you are a well qualified buyer. There are always opportunities, whether you're looking for a home or an investment property. And if you are well qualified, have sufficient financial strength, then this could be a good time to look for, well, shall I say, bargains. How about if you're looking to renew your mortgage? Well, that experience is going to vary. If you're coming off a 1 to 2 or maybe even a 3 year term, you might find some relief in terms of lower interest rates and maybe a possible lower monthly payment. But however, if you are renewing from an existing 5 year term or a 4 year term, brace yourself for potentially cash flow challenges, higher interest rates. And so you need to factor into that budget well in advance and adjust to the new reality. Well, here's a pro tip: work with a mortgage agent or a broker to ensure your bank or existing lenders' renewal offers are competitive. And if they are not, then for sure make sure that you are in a position to move that. And I would advise working with somebody well in advance, at least 1.5 to 2 months in advance of your maturity, because it takes time to move a mortgage. Um, and if you're short on time, it is not the end of the world. It can Things can still happen. It just means that you would probably need to move into an open mortgage, which comes with its own higher interest costs, albeit for a shorter period of time, but still, it is money out of the pocket. But ultimately, remember, folks, the interest rate is not the only determinant of your mortgage's interest cost. There are plenty of techniques to reduce these costs, so don't think you're stuck once you lock in a rate. Reach out to me if you'd like to more about how you could reduce your interest costs, whether you are in a term, whether you're completing an existing term, your rates are high. We can discuss, and I'm surely we can find ways to reduce your cost by a percent or two easily. Okay. So I guess that completes my outlook for the year. So just to summarize, fixed rates may not really drop from here. Variable rate mortgages right now are slightly priced higher than the fixed rate mortgages, and they could drop by another 50 basis points. And so by the end of the year, my feeling is that the variable rates would surely be below the fixed rates, as has been the longer term trend. But it could be a wild year for interest rates. Real estate market may not see a resurgence. You should probably be building off of what we saw in 2024, which was really a slow year. So expect more transactions to take place, but not really um, a year for tremendously high growth in prices. The December employment figures were strong in Canada, with more job additions than expected. And so at the end of the year, there were some opinions that the Bank of Canada may stop cutting rates further or not as aggressive as they were in the year 2024, wherein they dropped by 1.75%. Inflation figures for December came in softer because of the GST rebate and the effects of it, at least for the later part of the month. But the nearer term inflation figures were a bit higher, so it's a bit of a concern. Things that you have to watch out in the coming weeks are the Bank of Canada announcement, which is on the 29th of January. So mark your calendars. It's happening alongside the US federal announcement as well, which is rather unusual. Odds are that the Bank of Canada could reduce rates by 25 basis points because primarily I think the concerns are again around the Canadian growth rate. And so I wouldn't be surprised if they cut by 25 basis points. Well, Trump tariffs. Watch out for 1st of February because that could be a critical date for Canada. And we'll have our GDP figures for November coming out on the 31st of January. So those are the few things we can watch out for in the coming days or rather next week. Okay, so now for the second half of this today's episode, let's change gears and talk about setting some financial goals for 2025. Here are some key areas that you could focus on. Firstly, create a monthly budget. this is something that everybody should already have, but in case you don't have, then get a handle on your expenses and set a savings target. It is like dieting, but for your wallet. Cut the fat and save the meat. Unless you know what your expenses are and compare that against your income, you don't know what you could do to change things up and create a savings habit. Secondly, set some investment goals. Whether you're a beginner or a seasoned investor, having clear targets in terms of how much you want to invest, where you want to invest, and for what purpose will guide your decisions and your long term plans. So, revisit your goals if they're existing or set new investment goals for the year. Thirdly, file your taxes on time. That means having your documents in order, your financial figures in order, and then get that out on time. Avoid penalties and plan to use any refunds, tax refunds, I mean, in a judicious manner. Invest it and do not splurge it. Fourthly, contribute to your TFSA. The limit for the year is 7,000. Well, in addition to any catch up that you may have from any previous years. So at least 7,000 for 2025. And make sure you invest it on day one. We are already on the end towards the end of the month. So you could have invested maybe 20 days back. If you're a first-time home buyer, then also consider the FHSA or the First Home Savings Account. That gives you a limit of $8,000 each year, and that is tax deductible and tax-free growth. So don't miss out on that. Then we have RESP contributions. So if you have kids under 17, make use of the grants that the government of Canada provides. So maximize your RESP contributions. I think up to 2,500 per child per year is the limit. So make sure you do that. Now, some longer term goals. Well, determine what your net worth is. Know where you stand today and look for strategies and plan how to grow it and diversify your net worth as well. How about your mortgage? Well, have a concrete plan in terms of figures that you or amounts that you would prepay this year and the dates. Now, in case you have plans and struggle meeting those plans, then I have a way wherein you can make sure you don't. So reach out and ask about it. Lastly, build an emergency fund. Ensure it covers your expenses for at least 6 months. Now, these could be in the form of cash, GIC, or other short term investments. I would advise against relying on line of credit or home equity line of credit to fund your emergency funds because lines of credit and home equity line of credits can be taken away by the lender or the bank at any point without any notice. Okay. So that's a wrap for today's episode. Remember, your financial future is in your hands, and with a bit of planning and a lot of determination, 2025 can be your best year yet. Don't forget to subscribe to my newsletter. The link is in the description. Until next time, keep getting your shit together. See you soon.